Well, I decided to do a second video here in St. Augustine because I still have a 3-hour drive up to Savannah, Georgia. Got to edit and post both these videos on YouTube later today, so lots of work to do still, and just be easier for me to do this one here. But don't worry, we still got plenty of new places to see on this road trip. Obviously, I've been covering a lot of different issues that we're having with our economy, highlighting different problems people are having with debt and not being able to pay their bills, and how incomes are not keeping up with inflation, all sorts of things like that. And today, I have a lot of stories that you guys sent me that I wanted to share with the audience, because I'm sure a lot of people can relate to this because these things are happening to regular, everyday people out there. And so one of my viewers, Louis, he works for one of those self-storage unit places, okay? And he told me he's seeing a lot of people that have the storage units that are either late on paying their bill or not paying for it at all. And the way that he knows that is because when you don't pay the bill at the storage place, they will go and put a red lock on your door after 10 days of being late. He's even saying that up in Ohio, where he lives, he sees a lot of people who are renting storage sheds to eventually own them and are using this as housing because of how unaffordable it is to buy a house right now. This is very valuable insider information on what's happening in Louis' little slice of America over in Ohio, because it highlights two things, guys. Number one, that people are struggling so much they can't pay for their storage units and are starting to let them go. And it also shows you that housing, even in an affordable Midwestern state like Ohio, is still so expensive for the locals that people are opting for cheaper options like renting to own a storage shed. I mean, I don't know, guys. I guess if you're not home a lot and you don't like running water and all that stuff, that might work, but at least a tiny house or something that has all of the, amenities of a regular house, just on a much smaller scale, would be more appropriate for people to live in. But here's the other thing that a lot of people probably don't realize. Like, when you can't pay your bills, regardless of what it is, we'll use the storage unit for today's example, then this can go against your credit score. You can take a hit, your account can end up in collections, and eventually that can ding your credit and make life even harder. Because one thing that we know for sure in this country is the lower your credit score, the more expensive it is to live and to exist. Because when you have bad credit, you get charged higher interest rates on everything, you get less favorable loan terms for anything you're trying to finance, or no financing options at all. And it just makes life harder when you don't have good credit. And whether you like it or not, to exist in this world and to be able to play the financial game that we have here, having a higher credit score works in your favor. I don't know what it is, guys, but the bugs here right now are so bad. Out of all the times I've been to St. Augustine, I've never had the attack of bugs like I've been getting right now. I'm just getting swarmed by these tiny little gnats around here. And so all these little things like, well, I can't afford the storage unit and I'll just stop paying for it, sound like an easy way to just eliminate one of the bills from your life, but you're going to take a hit on your credit score, and ultimately that will hurt you financially next time you want to finance a cell phone or buy a house or get a loan for a car, anything like that. Then this decision will come back to haunt you. Speaking of haunting, they say St. Augustine is haunted. Anybody out there believe in that? This is a village street. This is the oldest street in St. Augustine. So who knows, maybe I'm being followed by a ghost right now. And the other problem with having anything go to collections is the fact that when you go to collections, that can stay on your credit report for up to 7 years. So this can have a really long-lasting negative impact on your finances just by saying, well, I don't feel like paying this for the storage unit, I'm just going to let it go. Because one thing I see a lot of people doing, I've heard people doing this right now, is, instead of throwing stuff away and paying for these huge dumpsters that cost a lot of money, they'll just move stuff into a storage unit and not pay for it, because after that, the storage people will repossess the unit and they will auction off the belongings inside. And this is like an easy way to get rid of a lot of trash if you have a truck and you can just haul everything over there. But it's probably going to be worth it to just pay for the dumpster, guys, because that decision is going to hurt your credit for a very long time. So you know how when you go and pay for stuff sometimes and you want to use a credit card, the vendor will charge you extra, like an extra 2 or 3% to pay for the credit card fee. Yeah, well, now stuff like this is starting to happen when you decide you want to pay cash for something. Have you ever heard of anything like this before? Because I haven't until I just read about this and I'm sharing it with you. This news story talked to somebody who went to a baseball game at Yankee Stadium out of New York, and apparently they don't take cash anymore. And they actually have a kiosk where you can convert your cash into plastic. And so in order to turn $200 of cash into plastic, they charge you a $3.50 fee, and they give you a debit card for $196.50. Here's the crazy thing about this. Paying cash for anything used to be a way to get a discount. It still is when we're talking about real estate. Like, every time you have a cash buyer, they always think that they can get the house for a lower price than somebody who's financing. And the reason for that is simple. It's just because when you're financing, there's more obstacles to closing the deal. There's also a chance that the deal may not close. And so paying cash for the property gives that extra leverage to the buyer, where there's nothing that can go wrong with the transaction other than the fact that maybe they changed their mind, and that's it. Check out this place, guys. Super old house. 1798 or so this place was built. I've never even seen one of these reverse cash ATMs where you basically use it to turn your cash into a debit card. And maybe people that go to these sporting events and stuff more often maybe have seen that before. But this is a new one for me, guys. I think in some ways it makes sense because, okay, you don't want to be, fiddling around with cash and change and all this while you're trying to sell a ton of drinks and hot dogs or whatever. But this is kind of the push into this cashless society that we're always hearing about. First, you're seeing it with private venues like this, and now you have different government agencies that penalize you for using cash now. Like if you want to pay for a parking ticket or tolls or your taxes, they're charging fees for this stuff now. So the two most popular ways that people buy things today are credit card and with your cell phone, using that as the payment method. But cash is still the third most popular way of paying for things. It's 16% of all payments as of 2023, according to the Fed, and that's down 2 percentage points from 2022. So they're saying that cash usage is steadily declining, and this is the reason why we should just be, letting go of this. But really, it's about control. It's about introducing a CBDC, which is not going to be good for our future society. Surprisingly enough, I remember reporting on this a few months ago that California actually has it where it's mandatory that businesses still have to accept cash. Well, out of all places, you would think that'd be the place that would be eliminating it first with all their crazy agendas over there. But apparently no. They're still standing up for people that need to pay cash for things or prefer to, and that's still a big segment of society that has a lot of people who don't have bank accounts, and cash is still their main form of payment, and they don't want them to be excluded because everything in California is inclusive, except for housing, of course. Back in 2023, both the House and the Senate introduced bills that require businesses to accept cash for all in-person purchases under $500 unless they provide a device like the reverse ATM and don't charge a fee. But still, it's like these little purchases where it gets you guys. Like this guy at the baseball game wanted to spend $200 but got dinged for not having a card and having cash. And of course, it's usually the elderly and lower income people that use cash the most. And these are the people who are hurt by this. It just blows my mind that people are literally being punished right now for using cash, and that's where things are headed. So we've heard a lot about the CBDC, and this is like the latest agenda that the government's trying to push on us. And if things keep going this way, they may succeed at it. Now, one of the reasons that the government wants to go cashless as well, most likely, is not only for control, but also to mask how much money that they spend. Even though this information is all publicly available online, it makes it less obvious when everybody's just swiping cards and seeing numbers on a screen, right? Take a look at this graph, guys. This shows you our national debt all the way back to the early 1970s. And what do you notice? It didn't really start to pick up until around 1980, which is about a decade after we decided to take the dollar off the gold standard. Here we have a house for sale for $1.5 million in St. Augustine. Only 2-bedroom, 1.5 bath on the main drag here, but it's a flip. They bought it back in 2022 for $925,000. Now, just 2 years later, they want to sell it for $1.5 million. Well, good luck with that. They've already had it listed for a few months. No takers and no price cuts. Property taxes, $14,500 a year, and this property is just sitting on the market. And first of all, what that tells you is America was very stable financially for a long time before we took the dollar off the gold standard. You didn't see these crazy spikes in our national debt. And even after we took it off, it went up a lot, but nothing like we've seen ever since the GFC, guys. Ever since then, our national debt has just taken off like a rocket ship, and COVID just expedited that exponentially, as you can see here on this graph. And there's a couple points I want to make about this, and one of my viewers, Rainer, he sent me this as an example for me to give on the channel. He's always writing me these big long essays about our economy. This chart shows you two things. It shows you, one, that we used to be a lot more fiscally responsible in this country because the gold standard forces you to stay honest, because you cannot just keep printing money indefinitely. You're forced to stay within your means, right? But since we got rid of that, we can just print endlessly with no consequence up until recently. And the other thing that it shows you is, going back on this chart, it doesn't matter who was elected president, guys. It doesn't matter if it was a Democrat or a Republican. The national debt continued to go up. Not even once since then has it come down. Not even a little bit. It's always gone up by a lot. So the reason I want to bring that up is because everybody thinks that, you know, if a new president is elected, that somehow this is going to fix our financial problems in the country. And unfortunately, it's not. It may fix other problems like immigration, things like that, but it is not going to fix the national debt. I can guarantee you, whoever is in office next is going to continue spending, because that's what politicians do. And part of the reason for this is because it's the only option moving forward. They have to keep printing money now in order to keep this whole system afloat, because if they stop now, everything will come crashing down. This economy that we have today runs and is fueled by debt. And without it, it'll just take the air right out of the sails. But as we can see by this graph and how much it has gone up just over the past 15 years, that it's not sustainable. We can't keep doing this for very much longer, most likely. And we're starting to get a taste of that now, of how people can't pay for their storage units, people can't pay for their car loans, people can't pay for their credit card bills, and different things that are starting to, you know, add pressure to the system. So I think we can all look at this and say this is unsustainable, but the real question is, when does it come to an end? You know, how much longer can they keep doing this before everyday items are just unaffordable and we reach hyperinflation? I feel like that day is continuously getting closer as we see the purchasing power of our dollar continue to get eroded very quickly. The real issue, guys, is nobody wants to hear about this and nobody wants to think about it until it's too late. And this is the problem with economists and politicians in general. They don't want to look at the reality of what's actually happening. They only want to focus on what they hope or think might happen in the future, which is a great point that Rainer made to me. And you can see this, it's reflected in their behavior. But one thing I forgot to say about paying extra for using cash, as much as that sucks, I will still say, guys, I think it's better, because a lot of people might want to use cash sometimes in order to avoid going into credit card debt because they don't trust themselves with the plastic. And this is a better way to make sure they spend less money, because once the cash is gone, they can't spend more. And I totally get that. It's a responsible way to keep your finances in check if that's you. But keep in mind that it would probably make more sense, even though it sucks, to pay a fee for paying cash than to use a credit card out of convenience and not get charged the fee, especially if you're prone to overspending and spending money you don't have. So keep that in mind if it's something that you know is a problem for you, because that small little extra convenience fee of $2 or $3 paying cash might still just keep more cash in your pocket in the long run. Now, Chris from Kansas, he's a big fan of my channel, and he wrote me a bunch of stats that he's noticing are costing him more now as of the past couple of years because of how bad inflation is, okay? He lives basically in rural Kansas where there's not much out there, guys. He said all they really have is a Dairy Queen, a Pizza Hut, and a Dollar General. He's been keeping track of his finances pretty diligently since the pandemic, especially with how much the cost of living has been rising. He says that he bought the same bag of groceries before the pandemic was $142. Now that same bag of groceries is $285. That is almost double, or basically is double, for anybody who's paying attention. And I'm not surprised by that at all, first of all. He used to spend $140 a month on gasoline. Now he spends $225 a month. He said him and his wife used to go out to eat once a week and they would tip 50%, which is very generous tippers. I don't think I've ever seen anybody tip that much. So I'm sure your waiters and waitresses absolutely love you guys. But now they can only go out and do that once a month. So that's also probably why you're seeing the restaurants in as much trouble as they are right now. Because think about it, guys, people who used to go out to eat once a week are now only going out once a month. That's a 75% reduction in the amount of times you're patronizing a business. So that type of situation is not sustainable for a business. If they're losing that much revenue, no wonder we're seeing all these places go under right now. He said they used to take a small little vacation and stay in a nice hotel and leave the maid a tip twice a month. Now they're only doing it once a month. So that's a 50% reduction in how much they're doing that. Their electric and natural gas bill used to be $180 a month. Now it's $295 a month, another bill that is almost doubled. Before the pandemic, they were paying $4,380 a year on auto insurance. They have 5 cars, and 2 of them have full coverage. They have the same 5 cars, same coverage, no accidents or traffic tickets in the past few years. Now they're paying $8,052 a year, guys. Another thing that has doubled. So tell me how many people have seen their pay double in the same time frame. It's only been, 4 years since the onset of the pandemic. And everything like this is up double. How much has pay gone up? Well, we know it's gone up only by 18% during this time frame. So this is nowhere near enough to keep up with it. He also said that one thing he saw in his little town in Kansas, which is kind of surprising to me. You wouldn't think a lot of people would do this and want to move to the middle of nowhere. But he says you saw a lot of people from New York and Illinois move there, paying way over asking price for the homes, drive up the cost of housing. That was kind of something that we saw everywhere, particularly here in Florida. But I'm surprised that people did it in very rural, middle of nowhere areas like that. And Chris sent me a lot of other things, but I really wanted to highlight his story here to show you guys just how much inflation has cost people. And these are just regular people living in the middle of Kansas, and they're seeing their bills on everything practically double. So just tell me the argument, guys. Tell me how you expect people to keep up with this. The people who say the economy is great and things have never been better, tell me how you expect the average person to continue with this. If they come out with another round of stimulus because the economy starts suffering and we head into a recession and inflation gets even worse, tell me how people are going to pay for things then. Just tell me, because I don't see it. I really don't. It's just one of those situations that's just going to continue to get worse before it gets better. But I'm not sure if it ever is going to get better, because that would require inflation getting better. In fact, it would probably require deflation, where we actually see a reduction in prices in things that we all need to buy, like the things Chris mentioned, because all those things are necessities. Everybody needs car insurance, everybody needs to buy groceries, everybody needs to buy fuel. Those are just things that people need. Those aren't luxuries. I know going out to eat is, but look at that, a cutback of 75% to keep the lights on and to pay for all these other expenses. So what's next? You can't cut out everything. But if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.